So Tesla's earning $5,000 from the average Tesla car buyer every 5 years. If you move to an autonomous vehicle robotaxi world, and if you drive down the cost of transportation, more and more people are going to take more and more rides, and eventually those people may opt to get rid of their third car, get rid of their second car, and eventually get rid of their first car. Some people only have one car. They might get rid of the one and only car. I have robotaxis making about, call it 25 to 30,000 a year. People will make the rational economic decision if they can save money. The magnitude of change in Tesla's business model is what could drive this kind of hockey stick growth that a lot of us are forecasting.
That's just mind-boggling. In 10 quarters, you can pretty much, what is that, 20 times your operating income. Unheard of.
Right. So for me, this is actually the best proxy for what could happen with Tesla going forward. Amazon went from being a low margin seller of books and other products that they still are today, that they still do that business. They layered on a very profitable high growth business in the cloud services business. That's really what Tesla's looking at with robotaxi. How many other CEOs in history have bought $1 billion of their stock on the open market?
Not.
I think we can name them on one finger.
Sir Basher, it's a pleasure having you on. Always loving you having on my channel. The viewers love it. I love it. The value that you bring, the research and analysis that you do is top notch. And it's a big contribution to the Tesla community. And we all love you for it. And that's why I keep asking you to come back. And I'll keep asking you to come back on my channel because your insights are awesome. Your insights are flipping awesome, especially with your recent analysis showing how when Tesla reaches 400 billion and anything in between shows how far the company valuation and the stock can grow. That was an amazing analysis that I think every investor, every Tesla investor should really look at and see how awesome and how this not technical stuff, but this fundamental and number stuff works. Because it's very important. If you're a long-term Tesla investor and you've been frustrated for the past 5 years because it's been flat, well, this analysis, this insight is going to change a lot of that. So thank you, Cern Basher. Pleasure having you on, and welcome to the channel again. Love it.
Pejjy, it's great to be here. Thanks for having me on. And yeah, this is going to be, I think, an interesting and an important discussion, right? Because what will Tesla be valued at when they cross that magical 400 billion in EBITDA milestone? And I think it's interesting because the board had a number of 8.5 trillion in there, and I think people have anchored on that number.
Yes.
And I think that's the wrong number to anchor on.
Yes, I've always said on the channel as well that if it's gonna hit 8.5 trillion, it's gonna go into tens of trillions for all the things that it's set to do, that Elon is supposed to do with the company and stuff like that.
Yep.
So love it. Everyone who, if you are in the Tesla community and you aren't following Cern Basher on X, now on YouTube, he has a Clips channel as well. Both links are in the description. So I highly recommend you guys to go and follow him. Awesome insights. And you're going to see today in today's analysis video on how awesome these insights are. So sheesh. Are you ready, Cern?
Yes, I am. Let's talk about a whole bunch of companies, the Mag 7 particularly. But let's, in sort of relation to that, let's address this notion that Tesla is ridiculously overvalued. There's a certain individual out there that's been saying that lately. And let's see if we can sort of pull this apart a little bit.
Yep, that's right. That's right.
So one of the visuals here is this one, which is kind of fun, showing the Ford PE ratio, right, for the companies in the Mag 7. And the headline here is that Meta is the cheapest Mag 7 stock. But the one that sticks out like a sore thumb there in red is Tesla on the left side.
Yeah.
At 189 times Ford earnings, according to this page.
That is crazy.
And you look at this and you compare it to all the others, Apple at 30 times, Amazon at 29 times, Google at 29, Microsoft, Nvidia 25 and 24, the S&P at 22, and Meta, poor Meta, only at 21 times earnings.
Yep.
Now, when you look at this, is this the right way to look at the valuation of companies, right? And you can see it's the Ford PE ratio, and it's for the next 12 months, right? So it's not looking at any earnings other than what's coming in the next 12 months.
That's right.
Now, is that the right way to look at a growth company?
No, absolutely not.
I don't think so. And we'll share why here in a second. But just keep in mind when you see PE ratios like this, it's for usually just, either the worst thing is looking at the last 12 months, but usually it's looking at the expectations for the next 12 months ahead.
That's right.
Right. And if you think about a company, all of these companies aren't just going to earn earnings for the next 12 months and then be done. They're not going to close their doors a year from now.
That's right.
So when you value a company, you need to include more than just the next 12 months.
Yep.
And the reason is that some of these companies are growing faster than others. And some of these companies are embarking on a business model change, right, that could change things materially. So we'll get into that a little bit deeper here in a second. The next chart is a similar one. And this is net income projections for the next 12 months. This is kind of the E in the PE.
Yeah. Wow.
So again, Tesla kind of sticks out like a sore thumb because you can barely see it on this chart. So the net income expectations for the next 12 months for Tesla, according to this chart, is a mere $5 billion. Where all the other Mag 7 stocks are between, 59 billion and 124 billion. They're kind of a step change ahead of where Tesla is.
Yeah.
So you could easily see, Pejjy, for kind of the uninitiated in all this, that they would look at this and say, this doesn't make any sense for Tesla. Why is this such a highly valued company? It's ridiculously overvalued.
That's right.
Well, the next slide is the answer. You have to look at a company and its earnings projections, ideally over its lifetime. Now, the problem is this is really hard to do. And who has much visibility beyond the next 12 months? Not many. So because this is so difficult, most analysts don't even try.
That's right.
They might have long-term earnings models, but they typically make their price targets based on their view over the next 12 months. And when we get to the mid-year, like June or July, they might then look at the next year. So at that point, they might be looking at the next 18 months. But typically, it's a pretty short-term time period. So this is a kind of a stylized chart of looking at the present value of earnings for a rapidly growing company. If you want, you can call us Nvidia. If you want, you can call us Tesla or your favorite stock, Palantir, perhaps. Right? And so in this case, this is an example of a model where it's projected rapid earnings growth for 10 years. And this is showing the present value of those earnings. So each year is discounted at your required rate of return. Let's call it 12%. But the earnings are growing faster than 12%. So the bars are going up.
That's right.
But then in year 11, the earnings expectations now is no longer growing as fast as your discount rate. So the present value gets less and less and less and less as you go further out.
That's right.
So ideally, again, you want to be looking at companies and doing this for every single one. The problem is it's really difficult. So no one does it.
Cern does it.
Yes. But the problem is then if you look at the PE ratio, look at the first little blue bar.
Yeah, right there.
Right. So if you take a price relative to those earnings, look at what you're missing. Yeah. Look at the avalanche of earnings behind that. Right. Now, the challenge is, of course, are those projections correct? Well, clearly for Tesla, the market is expecting massive growth in revenue and earnings in the coming years. That is why Tesla is trading at, call it 189 times earnings, if that's even the right number, right? Because they're looking at just that little blue bar on the left. Yeah. So of course it's trading at 189 times that, because if you factor in some future growth that's higher, you're going to get a lot more earnings and pretty quickly.
That's right. And majority of these analysts are projecting what the earnings of Tesla is going to be. The robotaxi and the FSD stuff are not really added into it.
No.
It's usually the things that are already currently existing. Energy is the one that they seem to be increasing their projections on that because now it's, beating expectations. And I think for the first time ever, over $1 billion in gross profits. So they're adding that in with vehicles, but the expectations will drastically change once they add in FSD revenue, profits, and the other stuff, robotaxi stuff, and eventually the bots. I'm here in Toronto. For the first time, I tried the version 14.2. I rented a Tesla that allows me to use that. and I have not been driving once since I've been here. Like, it's incredible. Like 99.5% of the time, it's driving. I had a Chipotle bowl in my hand with with a fork and the bowl in the other hand. I'm eating, and like it took me to my destination safely, and in a much like it drove better than me. Like, it was insane. I'm just like mind blown. So once everyone knows about this technology, and those Tesla owners that finally do use their FSD and are comfortable with it, and the take rate shoots up, I think we're going to see a much increase in the forward looking in revenue and profits, and I think things will change then.
Yeah, so let's just sort of drill down that a little bit just to make sure your viewers totally understand what's coming here, right?
Mm-hmm.
So if you think about Tesla today, they sell a car,
Mm-hmm.
right? And their net profit per car might be $5,000.
Right.
Probably less, but let's call it 5,000. Okay.
Mm-hmm.
How often do you buy a car, Pejjy? Let's say the average person buys a car every what, 6-7 years?
Yeah.
Okay. Let's call it 5. Let's be generous. Every 5 years.
Okay.
Okay. So Tesla's earning $5,000 from the average Tesla car buyer every 5 years. If you move to an autonomous vehicle robotaxi world, and if you drive down the cost of transportation, more and more people are going to take more and more rides, and eventually those people may opt to get rid of their third car, get rid of their second car, and eventually get rid of their first car. Some people only have one car. They might get rid of the one and only car.
Right.
Because rides will be cheaper, the transportation will be cheaper than owning their own vehicle. They can repurpose their garage for another room in their house. They can not pay for parking, and in some places it's expensive. No longer pay for insurance, no longer pay for the vehicle itself. People will make the rational economic decision if they can save money. Right? Yeah. And once robo-taxis are ubiquitous and all that. So in that case then, in that model, for very conservative assumptions, I have robo-taxis making about, call it 25 to 30,000 a year. So on a per year basis compared to that 5,000, it's already 5 or 6 times as much. But remember, they're not making that 5,000 every year. It's once every 5 years. So now it's the 25 times 5 or 30 times 5. The magnitude of change in Tesla's business model is what could drive this kind of hockey stick growth that a lot of us are forecasting.
That's right.
Okay.
Yep.
Not to mention what you just said, once people become aware of how great FSD is, Tesla may also have an uptick in auto sales and FSD sales because people want these cars that can drive themselves.
That's right. That's right. That's a very good point, because a lot of automakers, they're having a very hard time. Some people are saying that BYD is gonna make it free, the FSD, but I'm just like, what autopilot? Like just highway navigation, just going straight. Like, this thing is going through side streets to highways to making complex moves that nobody else can do, and this can be scaled up across the line. And if Tesla's the only company that can do this, and they don't license out this tech, or other companies don't want to license out this tech, then eventually, yes, you're 100% right, Cern, the uptick of sales of Tesla will go up, because they'll realize that this is the car that this is the car that drives itself. And people then, that's when everyone will realize that Tesla is no longer this electric vehicle company. It's that car company. It's that car that drives itself. Once we're at that stage, I don't think we're going to be in the same valuations that we are now. That's my thinking to it.
Yeah. This is previewing sort of what we're going to talk about a little bit later. But if you think about Nvidia, they had GPUs that were used for gaming. Okay. And then along came some AI researchers and discovered that their GPUs were pretty darn good for AI models, and hence where Nvidia is today. So it was a pretty significant sort of business model change for Nvidia too, although again different, because Nvidia is just selling a whole bunch more of their chips. They're not having this massive change in margin opportunity that Tesla will have, right? Instead of 5,000 per year, 25 to 30,000 per year for 5-6 years. Nvidia's had some margin expansion too, but only because they're able to sell more of these chips in high demand for AI purposes. So, but it's not such a foundational change, I think, is what Tesla is going to have. Okay, so before we get to the Tesla versus Nvidia thing, let's look at all the Meg 7 stocks real quick, right? And look at their valuation over time. So the first one here is Microsoft, okay? And this goes back to the year 2000. And what we're showing on this chart, maybe a little hard to see, but the blue line shows the PE ratio over time. This is based on the next 12 months. So right now, Microsoft's trading at about 29.5 the next 12 months expected earnings. And you can see back in the year 2000, it was trading at between 70 and 80 times, as high as maybe, about around 80 times.
Yeah.
Back then.
Yeah.
Right. And that was expensive based, if you just look at PE multiples. And of course, then you can see the internet, crash happened. And Microsoft's PE went all the way down under 10 times earnings.
Yeah.
Okay. And then in recent years has recovered. Okay. So if you were just to look at this chart, Pejjy, when do you think was a good time to buy Microsoft?
Oh my God. I mean, the best time would have been at the crash, when it crashed, but also at the high PE at 80, if you had a long-term vision of the company.
Yeah.
But the best time would have been in the 2012.
Yeah. Back then, they had a combination of low valuation, and then they were about to ramp up earnings growth.
Yeah.
Okay. So if you flip to the next slide, this is Microsoft operating income over the similar time period. Actually, it's a little bit longer.
That is crazy.
Okay. So for the most part, you can see this was a growing company almost all the time. There was a few quarters, maybe a year or two, where they struggled a bit. But you can see suddenly there in about 2017 that they kind of found a new level, and since then it's basically almost been higher every quarter thereafter, with one little blip.
That's
kind of post pandemic. So as you can imagine, if you have a company growing like this, their stock price probably did pretty well, right?
Oh yeah.
Right. So if you look at the next page, we can see that.
Yeah, that is insane.
What I highlighted there, kind of in the middle left of the screen, is Microsoft at the end of 1999 was trading at a PE of about 30 times earnings. Yeah, it's true that the stock went down after that. It's true that the PE went down to 10. And it's true that it took 14 years for the company to hit a new high. Such was the carnage after the dot-com crash. But to your point, even if you bought it at that point and held on to today, sorry, it's $35 a share, not PE, $35 a share back then.
Yeah.
And Microsoft now is at $4.90.
That's like what? Like almost a 16-fold, 16x,
Yeah.
15x. That is insane.
Pretty healthy return.
Yeah. Generational return.
Yeah. Now, in this case, you suffered 14 years of, you were underwater for 14 years. That was pretty tough.
Yeah.
Okay.
But if you were dollar cost averaging,
yeah,
I mean, that would have, not only would you would have 16-fold your money, you probably would have over 20x with more value.
Yeah, there were plenty of opportunities to buy low here for sure.
Yeah.
So the PE didn't really tell us a whole lot here necessarily, right? Like, yeah, maybe it was high in retrospect during the dot-com years at 80, 85 times earnings. Yeah, and yeah, it did go down as low as 10, and that was a bargain. But in recent years, the stocks just continue to climb now for the last 10 years straight. So again, the PE based on 1 year earnings doesn't really tell you a whole lot. Let's look at Amazon. It's a similar kind of story.
Wow. Geez.
During
500 PE.
Yeah. So Amazon was famous for saying, we don't really care about earnings. We just want to grow our revenue.
Yeah.
Right. And so the PE kind of reflected that at one point during 2015, earnings were next to nothing, and the PE was almost 500 times earnings.
But that's because of AWS came in the picture, correct? That's when the AWS.
And that's helped them a lot. Right.
Yeah.
And now on this chart, their current forward PE of 31.6 looks ridiculously low relative to where they've been in their whole history.
Yeah.
But this is another example of the market sort of looking past the 1 year earnings and saying, okay, we understand the story here. We understand the growth opportunity. We're willing to pay a whole lot more for this company. Right. And in this case, at one point, almost 500 times next year's earnings.
Yep.
Right. Imagine if Tesla was trading at 500 times next year's earnings.
Oh, once the market realizes the revenue profit surge from non-vehicle sales, then I think we could probably see something similar, probably even higher, in my opinion.
I could certainly justify it with my present value model for sure. Yeah.
Yes.
Yeah, and we've talked about that before.
Oh yeah.
Yep.
Oh yeah.
Now look at the next chart. This is actually Amazon's operating income growth, and you can see the AWS
Jeez.
impact there.
Like these charts boggle my mind. You know, it's like you have like from 1996 to like, you know, let's say 2018, you know, just kind of like flat, and then it just shoots up like that. Like these charts really boggle my mind. It's insane.
The lesson I learned from Amazon is sometimes it takes a long time for a company to invest in this business,
That's right.
lay the groundwork, build the infrastructure, build the network before they can really sort of operate that at its max and enjoy the benefits of that.
Yeah.
And I think Amazon is one such story, right?
Well, yeah.
And of course, AWS coming along also changed the nature of Amazon's business model, not unlike what robotaxi is likely to do for Tesla.
Mm-hmm.
Amazon went from being a low margin seller of books and other products that they still are today, that they still do that business.
Mm-hmm.
They layered on a very profitable high growth business in the cloud services business. That's really what Tesla's looking at with robotaxi.
Yep.
But yeah, look at the growth in operating income. It's staggering. It's straight up.
It's literally vertical.
Yeah. And of course, then as you can imagine, if we look at the stock price,
Oh yeah.
you know, the stock price has done very, very well.
From $2 like $2.30. Oh my God. You would have 100 times your investment. That is insane.
Now from the top of its price during the dot-com boom, the stock dropped, I think, like 97% from high to low.
Yeah.
So absolutely brutal. If there was anybody besides Jeff Bezos that held on, they're very happy today that they did.
Mm-hmm.
And there's probably not a whole lot of people that bought low and have also held on during this whole time period. They probably traded out of it. But this is one more example of finding a company, sticking with it, and just letting them do their work and enjoying the fruits of their labor.
That's right.
You know, was Amazon really ever truly overvalued?
That's a really good question. You know, when you look at, I mean, I guess it looks, if you have a long-term vision and you see, and you can see where Amazon's going, then the answer is no. The answer is always no. But if you're a short-term trader, like most of all these naysayers are with Tesla, then they're always going to say that it's overvalued right now.
Yeah.
But when they look, if you just span out 5 years, 10 years from now, I mean, Amazon's one of the greatest examples right here. It's incredible.
Yeah, it's interesting, isn't it? Because even if you bought the stock at the peak of the dot-com boom and held on, you're still extremely happy today.
Yeah, $5.
Right, $5 stock to $235 stock.
Incredible.
So that's another good one. And again, I think another good sort of similar story to what could be in store for Tesla.
Yep.
Alphabet, Google. Here's their PE multiple chart. They certainly have traded at much higher multiples. This is going back to 2005, PE of 60, 65, 55 times earnings.
That's right.
They've traded down as low as under 15. And today, currently, we've had a PE expansion and it's gone up to close to 30.
Yeah. And the recent news that Berkshire Hathaway bought some Google, that's a very bold move. I'm just like, wow. I did not see that coming. But the fact that I think Alphabet right now is at an all-time high. Berkshire Hathaway or Warren Buffett buying at these prices gives you a very strong signal, not just to Google, but like to the AI world that, yeah, I think it's just getting started.
And Elon also mentioned in an interview recently that,
Yes.
you know, what stocks would he buy? And he says, well, I don't really have a portfolio. I just run companies. I own stock in my companies. But if there was another company that might be interesting, he did mention Google.
He did mention Google.
He also mentioned Nvidia, I believe.
Yes.
Yeah. So it's just interesting, isn't it? That even with this PE expansion, we've still got, you know, Berkshire Hathaway buying into that.
Yeah. That is insane.
You'd think ideally they'd be bottom fishing around the 15 PE mark, you know, if possible, but they weren't.
They bought Apple similarly. At the time when they bought Apple, it was at the all-time high for them as well. I think like about a decade ago. So that's crazy. I can't wait for the day where Warren Buffett or Berkshire Hathaway buys Tesla stock. But I think that'll only happen once there's like enormous amount of earnings. And again, with the robotaxis and FSDA, when there's a clear path where they know that, okay, not 5 to 10x their investment, but 2 to 3 times their investment, knowing that they are safe. But I don't think the valuation is going to be where it is now when they do that.
No.
Yeah.
No, it won't be. And then if we look at the growth in operating income on the next page for Google, pretty impressive story.
Like literally every single quarter, there's been growth.
Pretty much. We did have a post-pandemic dip, like a lot of tech companies did.
Yep.
But they kind of brought forward some of their earnings, right? If you kind of smooth that out, you can just see that line basically just going straight through there. And then during the pandemic, you can see there was a dip for a quarter or two, and then things picked up very quickly after that.
That's right.
So yeah, this has been one of the great growth companies, incredibly steady growth. And then of course, on the next page, the stock price has responded over time. Has Google ever been overvalued? I think the answer is pretty clearly no.
Yeah. What is that? Like almost $5 to 300? Like that is, yeah.
I mean, every stock went down during the financial crisis in 08, 09.
Yeah.
So that was the biggest dip you see on this chart. The second biggest dip on this chart is kind of that post-pandemic period when their earnings suffered a little bit for a few quarters. And then to be complete, let's take a look at Apple. So Apple is traded at a PE as high as 85.
Yeah.
Right. And then come way down. Apple also then traded at a PE of around 10, just like Microsoft did for a period of time. That was a bargain. And in more recent years, it's fluctuated between 25 and 35. And right now it's at the higher end of that range. The next page is Apple's operating income, which is, again, a pretty impressive chart. The last 12 months of 133 billion of operating income.
That is incredible.
Compared to Google's 125 billion. And Amazon was at 78 and was going back. Microsoft was at 135 billion. So all these companies are producing a lot of operating income.
That's crazy. I think Apple is the highest out of all of them, right?
Apple was at 135, and I think I just said that Microsoft was 133, and Microsoft's at 135. They're
135. So Microsoft, that's right. Microsoft.
Yeah.
Yeah, that's incredible.
And then, of course, if you look at their stock price over time, over this time period, it's hard to say that Apple was ever overvalued.
Yeah, 70 cents and then nearly 300. That is just, wow.
So did it really matter when Apple was trading at 85 times earnings? Did it really matter when it was trading at 10?
Nope.
No, just own the stock. Let it do its thing over time.
Yep.
Right. So a lot of people could get really hung up on the PE multiple, and there's a lot of decisions being made about whether to buy and sell the stock based on PE.
Yeah.
And I'm here to say I'm not sure that's the best metric.
That's right. For it, PE is usually not usually, it's mainly for just the next 12 months, maybe even less.
Yeah.
That's it.
Yeah.
That's
for
the best way to look at it.
Short-term trading, sure. Yep.
That's it.
In that case, though, you might as well just ignore PE and just look at the chart.
Yeah, that's it.
Right.
Yep. At that point, that's right.
All right. And then we got Meta, traded PE as high as mid 60s. It's come down. It's been as low as about 12 and currently trading at about 22 times next 12 months earnings over this time period. And then if we look at operating income, pretty solid story for them.
Yep.
Again, the usual post-pandemic slip that we saw with other of the big cap tech companies. And then their stock price had certainly a big drop in that post-pandemic slip. And of course, Mark Zuckerberg was spending like a drunken sailor on the metaverse back then too.
Yeah. A
lot of people had lost faith in him, but certainly turned things around, and the stock has done very well since then.
Oh yeah, I do remember this crash going down, and I was really anticipating to buy some stock, but I'm just like, I don't know too much about Meta, but it seemed it was a really good time to buy in this dip, but I was too busy buying Tesla stock. So.
Yeah. Yeah. Sometimes, there's only so many companies you can really follow and understand.
That's right.
Right. So you have to be choosy there. Yep.
That's right.
All right. And then last but not least, here is Nvidia.
Oh yeah. Talk of the town.
And you can see their PE it's like a heartbeat. It's gone up and down like crazy. Was it a good time to sell when the PE was 95? I would say no, based on what we know now. And then if you look at their operating income growth, this is the craziest chart you've ever seen.
This is even crazier than Amazon's.
Yeah.
Like this is just crazy. This is just like jaw dropping.
So notice where they started from there. They went from 5 billion, which happens to be about where Tesla is now.
Mm-hmm. Mm-hmm.
And how many quarters is that? Maybe 10 quarters?
Yep.
Up to 110 billion.
That is just mind-boggling.
Right.
That's just mind-boggling. In 10 quarters, you can pretty much, what is that? 20 times your operating income.
Yeah.
Unheard of.
Right. So for me, this is actually the best proxy for what could happen with Tesla going forward.
Mm,
But
yeah.
even better for Tesla, because again, the nature of the change in their business model, they're going to massively increase margin, recurring revenue, and of course the growth. Nvidia had some of that. Certainly they're selling at a higher margin now, and they've had a massive revenue growth. But it's not like they're earning, 40 times as much money on each GPU.
Mhm.
Whereas Tesla, when they deploy a robotaxi, can earn, as we mentioned, 25 to 30,000 per year, not just a one-time $5,000 profit.
That's right.
That's the thing I think a lot of people are missing about what's going to happen for Tesla.
Yes.
And that's what should allow Tesla to ramp like this in the next few years.
Yeah, I'm not too sure if I'm ready to see that, but before that happens, I need more Tesla stock. That's all I need.
There's a saying, Pejjy, in the Bitcoin world, if you have more than one chair, you should sell all your chairs. You only need one chair. You can only sit
Yeah.
on one chair at one time. Sell everything. Yeah.
Yeah.
Not investment advice.
Not investment advice. Love it.
And then the stock price chart for Nvidia.
Yeah,
Again, was the stock ever overvalued? Well, in hindsight, no.
Yeah, that is 77 cents. Not even like 8 cents. Like, my God.
So that time when the stock was trading at 95 times earnings in late or in 2009, the stock, you can see there in 2009 was something like, 22 cents a share. And now we're at 181. So that would have been a pretty good purchase to buy it at 95 times earnings.
Yeah.
Use PE multiple at your own risk.
Yeah. Moral of this whole story, this whole thing is don't rely on PE for long-term returns. It doesn't work.
Now, let's focus on a little bit shorter time period for Nvidia and go to the next page. So this is Nvidia's market cap. And I'm showing the red bar there, which is their quarter ending Q1 of 2023.
Mm-hmm.
So you can kind of think of that as the fourth quarter of 2022. Their quarters are 1 month later than every other company.
Yes.
The market cap was 755 billion, and now it's 4.5 trillion. Okay, so pretty healthy increase. What was Nvidia's PE when it was trading at 755 billion?
I don't even know.
Right.
Oh, here we go.
Well, what we now know is that effectively it was trading at a PE of about 6. 6 times this last year's earnings. So I've created a new metric that I call Hindsight PE to show how ridiculously cheap these companies can be.
Yeah, I like that. I like that.
So Nvidia right now is trading at about 35.5 times the last 12 months earnings. But back then it was trading at about 6 times the last 12 month earnings that we just had. Right. Again, to show kind of the long-term nature of this and how people get so hung up on the short term that they miss these big opportunities.
Yeah, I like this. This perspective is really good. I like this a lot.
And if you go all the way to the left, you could have bought Nvidia for 0.01 PE.
Yeah.
Now, no one ever constructs a PE of a company of the price relative to earnings that are going to be 10 years out.
That's right.
No one ever does that. But I'm here to say that they kind of should. They should think about it.
Yes. I can't wait to see what the PE of today would be in 10 years time with 12-month earnings return, and we would see how cheap it was today compared to
it's going to be low. It's that 35 is going to shrink just like it has there. Maybe it'll be 10 times earnings instead of 6, but whatever, it'll still be incredibly low.
It's incredible.
Yeah. We've set the stage. Let's focus on Tesla.
Here we go. My God, look at this crazy chart.
Here's the PE multiple for Tesla since 2014. So high PE of 450 back when they had, very little earnings. Kind of Amazon-like PE multiples, right?
Yeah.
And more recent years, PE ranging from 20 and according to this currently 206 again. It depends on what your next 12 months earnings expectations are. This data comes from CoiFin, so it's whatever analysts are feeding that. These aren't my projections, but yeah, you can see the PE multiple all over the place. How do you trade the stock based on PE? In this case, look at the PE, how it's going all over the place.
It's crazy. It's like I can sense the stress. I can sense the stress. Like, that is crazy. I think at one point in 2020, the PE just for like I think a week, it went up to like 1800 or something like that. I remember that, and I'm just like, that is crazy. I think that's when Hertz made a deal with Tesla for 100,000, and the stock just went to all time highs at that time.
Yeah.
And that's when the P was like 1800 or something like that, and like now it's down to like 206. And at one point it was down at 20. That's where I dumped my whole entire savings into it because
Yeah.
I think the stock went down to like $100 or something. And
Yeah.
I'm just like, it's trading the same forward PE as Chipotle was. And I'm just like, seriously? So without a doubt, I just dumped my whole entire savings into it, like at that around this time. And I'm happy about that. But
And what's
Crazy.
interesting for Tesla on the next page, Pejjy, the operating income, it was negative for many years, and it got more negative.
Yes.
Right. So that takes a very brave investor to invest in that kind of period. But they turned the corner. And since then, their operating income grew pretty steadily and pretty handsomely and pretty rapidly for a while. And then for the last couple, 2 or 3 years, it's been trending down. It's been tough. It's been weak.
Yeah.
And we've got operating income now only about 5 billion. But again, this is just what's happened. It's not showing you what may be coming.
That's right.
So if you look at this chart, you would say, oh my gosh, the Tesla is on a slow decline or rapid decline, if you want to say it that way.
Yes. But
Right.
usually when people make this type of accusation, the bottom is near or getting close to it.
As is often the case. Yeah.
As is often the case.
Yeah. And then here's Tesla's stock price chart. We're all familiar with how this looks.
Yeah.
Sort of different levels that it's reached and two big jumps up.
Yep.
And we're all sort of preparing ourselves for a potential third big leg up at some point.
Yep.
With the ramp of robotaxi.
Yep.
And then when we start layering in the ramp of bots, then it's all over.
Oh my God. That is mind-boggling to me. Hard for me to comprehend the bots.
Yeah. So if you think about that PE chart that was all over the place and this chart, I don't know how you correlate the two of those.
Yeah. No, you can't. I mean,
yeah.
Compare it. I mean, look at that and look at that. I mean, you just can't.
No.
It makes the stock chart look stable.
That's right. Yeah.
Jeez.
That's right. We're all familiar too with the old adage on the next slide that people would always compare the market cap of Tesla versus the market cap of the entire auto industry.
Ah, yes.
And this was back when Tesla had a market cap of 659 billion. Okay, we're at 1.4 trillion now.
Yeah, more than double.
Right, and they're showing these auto companies, these ones had a market cap a little bit higher, but about the same.
Yeah.
But then they compared Tesla's revenue of 26 billion to 1.3 trillion for these other auto companies.
Yeah.
And of course, as we all know, since then it's gotten even worse. Tesla now has a market cap greater than the entire global auto industry.
Yep.
Right. So the problem with these kinds of analysis is it doesn't tell you anything about the future.
That's right.
Right. And a lot of people look at this and they just don't understand how Tesla could have such a high market cap.
Yep.
But if you don't do the projections, then you wouldn't understand why. One little quick cartoon here I thought was funny, and then we'll get on to what's Tesla going to be valued at the 400 billion EBITDA mark. This is a certain guy wearing a Big Short t-shirt. Screaming that Tesla is overvalued, Palantir is overvalued, Nvidia is overvalued, all his charts are going down. And Elon, Jensen, and Alex Karp are having a good laugh.
Having a good laugh. Yeah, I mean, recently he came out and he took a shot at Tesla investors and Elon. But I mean, the guy was only right once, and then he was wrong after that. And I think he closed down his fund because
return the capital to shareholders. Yep.
Yeah, exactly.
Well, what was left of the capital?
Whatever was left. So it's like,
But now he's being more vocal than ever.
My God, I love it.
Okay.
I love it.
So let's turn to the kind of the topic that we wanted to talk about at the start. Now that we've kind of laid all that foundation,
yes.
What is Tesla likely to be worth at the point that they meet the final EBITDA target in Elon's compensation plan of 400 billion? Now, the interesting thing about that, by the way, is that EBITDA target is actually in there 3 times, and it's a non-overlapping period. So if Tesla earns 400 billion for 12 months. He needs to earn it again for another 12 months and then again for another 12 months. So if you view this as a 10-year plan, he needs to hit that 400 billion in 7 years or in the 8th year. So he can also hit it in the 9th year and the 10th year.
That's crazy.
Okay. So don't look at this as, by 2035, it needs to be by like 2033, something like that. That would be a 36x increase in EBITDA. Of the last 12 months, Tesla's EBITDA is about 11 billion and the target's 400. So it's 36x. Now, in the compensation plan documents and the proxy, the board also has some market cap milestones, which of course Elon has no control over. But they gave us this final one of 8.5 trillion, which would be a 6x increase over today's market cap of about 1.4 trillion. But the implied multiple there is 21.3 market cap to EBITDA ratio. It's not quite a PE, but close, similar. So 21.3. So is that the right number? Is Tesla going to be valued at 21.3 times EBITDA at the point they cross the 400 billion EBITDA level?
Oh, no way.
Right? And I think the answer is no, but let's kind of go through this. The three companies that the board used to kind of set this plan and the valuation was Meta, Microsoft, and Alphabet. Those three companies over the last 12 months have earned EBITDA combined of about 355 billion. So almost the 400. The market cap of those three companies is about 9 trillion today. And at the time I think the board set this, it might have been closer to 8.5 trillion. And those companies collectively are trading at about 25 times EBITDA. But again, when the board did this back in the summer, it might have been more like 21, 22 times. That was the peer group that the board used. And I see why. Like, it's a reasonable peer group. Okay. But they didn't include Apple, Nvidia, and Amazon. The other three of the Meg 7. If you combine all six of them, they're earning about 718 billion in EBITDA, and the market cap's close to 20. And the market cap to EBITDA number is close to 28 times. And if you look at that, there's one company in there that has the highest EBITDA multiple, and that's Nvidia at 43.
Yeah.
Nvidia, for me, is the most similar to what Tesla is likely to be going through in the next 10 years, that hockey stick kind of growth.
Yeah.
And the market today is giving Nvidia a 43 times multiple. So I don't think that it's reasonable to assume that Tesla will only have a 21 times multiple at that point.
Yeah, I agree.
Let's look at it visually. Here's what it would look like if Tesla had a market cap of 8.5 trillion at the point that they earn the 400 billion in EBITDA. The other bars on the right there are where these other companies are today. And I'm not going to focus on projecting where they're going to be in 10 years. They'll all be likely higher too. Okay?
Yep.
But I wanted to show you again visually, if you go to the next page, the multiples for these. So right now, Tesla's EBITDA multiple is over 120.
Yeah.
And then they compared it to Meta, Microsoft, and Alphabet and said, okay, 21, 22 times EBITDA is a good number. We'll set the 8.5 trillion market cap milestone. But for me, Nvidia sticks out like a sore or a green thumb, I guess, so to speak,
Yeah.
in this chart. So I said, okay, what happens if we give Tesla the same multiple that Nvidia has? What would its market cap be? And we get to 17 trillion.
Yeah, that is crazy.
Okay, it's the second line down. Market capitalization there in blue, 17 trillion at 42.5 times EBITDA. And I think that's very defensible. And actually, I think it's even conservative, because at the point that Tesla hits 400 billion in EBITDA, that means that robotaxi is ramping aggressively. And it probably means that Optimus is ramping aggressively too. And those two markets are simply huge. And they're just getting started, particularly with Optimus. People have questions about Nvidia today about whether or not people are going to buy Google's chips and Amazon's chips and Tesla's chips. I don't know that at the point that we're ramping robotaxi and Optimus that people are going to worry about whether Tesla's going to be eaten by the competition.
That's right.
We'll see. Perhaps that will be an issue. We'll have to see. But I doubt it.
A low chance, very low chance of that.
Yeah. So by using Nvidia's multiple, that would factor that in. That's why Nvidia is trading at 43 times EBITDA instead of 50 today, perhaps, or 60, right? Which they could easily trade at if people weren't worried about competition.
That's right.
So I think the 17 trillion number for Tesla using that Nvidia multiple is somewhat conservative.
And a 17 trillion market cap, that's a stock price of nearly 5,300. So that's a 12x. Yeah, 12x right there. Yeah.
Yeah.
Jeez.
So it's still a 36x increase in profits, but only a 12x increase in market cap.
That's right, because it's just there's a lot of things baked into it.
Yeah.
Already.
Tesla's already trading at an EBITDA their ratio of 128.9 according to this analysis.
That's right.
So some of it's baked in, but obviously not all of it.
And that's right. I mean, even if you think about it, if and when I guess Tesla hits the 400 billion EBITDA, that means the year after that and the year after that, they can potentially maybe do at a conservative rate, go to 425, 450. I mean, maybe the EBITDA could be even actually higher, could be above that if, again, there's no competition or the competition is not producing or taking away much market share from Tesla, because Tesla's a company that from IPO till now, there was I guess a premium to the multiple always because of hype reasons and other reasons as well. So
Yeah.
this could potentially be even higher than that if you want to add those in, which is insane.
Well, let's say by then, I'm picking a number. Let's say by then they've delivered 10 million robots. How big is the robot market going to be? Well, Elon has said it's going to be in the billions. So if they've delivered 10 million and the market opportunities in the billions on Earth, off Earth,
That's not,
then
that's like 1%.
the multiple should be huge.
The multiple should be massive. That's
Right.
That's what I'm trying to get at. I'm just
Yeah.
interesting. It's an interesting future with Tesla.
Yeah. Now, the other cross current, Pejjy, that we need to think about is Elon has talked about how deflationary this is going to be.
Yes.
Right. As we put more and more bots into the world and it displaces labor, we drive down the cost of labor. Robotaxi is going to drive down the cost of transportation. Right. The energy, the megapack and solar is going to drive down the cost of energy. AI is driving down the cost of intelligence. We're going to have massive deflation go through the economy. So it's possible that Tesla doesn't get to 17 trillion market cap because, the revenue is not as high because the dollars per bot is lower because of deflation.
That's right.
But in that world, your dollar goes further. What you spend on today, if you have $100, what that will buy you in the future, that could buy you a whole lot more.
Yeah. That's also counting if the government doesn't stop printing.
Well, that's the other wild card. And right now, that's a pretty safe bet that they'll continue to print because of all the debt.
There we
In
go.
a deflationary world, that debt becomes way more expensive. So the government has no incentive to let the deflation flow through to the economy. They would just print to offset it. In that case, then the market cap number here is way too low, right?
My God.
But I just want to mention that the impact of massive deflation isn't factored in here. But your counterpoint is a strong one.
That's a hard one too. I mean, it's not a hard one, but it's like if you want to achieve deflation, the government kind of has to stop printing money. But that's gonna be that's a very hard thing. Get them to stop printing.
Yeah. No government in the world is going to willingly shut down its printing press.
Yes. Yes.
The only governments that have in the past are ones that were forced to, right? Think of Zimbabwe or other nations.
Oh my God. Yeah.
Right. And you have hyperinflation and they just can't do it anymore. They just have to reset. Now, we may see some nations adopt, other assets as their monetary base. And the leading candidate in my mind would be Bitcoin. The US, I don't think, will be first on that. But there's certainly an opportunity for forward-thinking countries to be first rather than last, right? Because of the whole game theory aspect of Bitcoin. If Bitcoin becomes the new sort of base layer of money, you don't want to be the last one in the door.
That's right.
Because of the fixed supply. So this is going to be very interesting to see how all this plays out with these debt-laden nations. Now, Elon's been talking lately about how ultimately really he thinks that money really is just energy. You can distill everything down to the energy element, whether it's the energy that's actually in the product, the energy to transport it, the energy in the labor that you could also measure as calories if humans are making it, or as kilowatt hours if bots are making it. And he's not the only one that's sort of out there, at least in history. Henry Ford talked about the idea of using basically energy as money. And in that case, then the governments can't just print more. They have to facilitate the development of infrastructure to make more energy. So this is an idea too. That I wrote a post on X recently about this, part one of a 3-part series. So I'm starting to explore this concept myself.
That's interesting.
And eventually, you could have a world, instead of using dollars, that you get an energy budget. Pejjy, you get, so many kilowatt hours of energy content a year, and you can spend that however you want. So food's priced in energy, housing is priced in energy, everything else is priced in the energy content that costs to make it. And in that world, that's how you could have a sustainable abundance, because it would be so cheap to make everything that your energy allotment goes really far.
That would be a very interesting world. That would mean to earn more energy, you would have to produce some sort of an energy. right? Is that how it would work?
You would need to be able to generate energy in order to grow wealth. Yeah. And of course,
Interesting.
we know now that there is no nation that produces a lot of energy that is poor. The rich nations of the world produce a ton of energy.
Oh yeah.
Right. So the more energy, the better. You can use it for AI. You can use it to build things. Use it for whatever. And so that kind of makes sense from that standpoint. The difficult part is the transition. How do we get from where we are today, fiat-based currencies controlled by governments, to something that's not controlled by a government? There's no government in the world that's going to willingly change unless they have to.
That's right.
But sometimes the change comes from the weakest and then moves up. And so we'll have to see how this plays out. But it's interesting, and I'm exploring it because Elon's been talking about it. I don't think he should be ignored on this topic.
I'll be looking forward to your parts, Cern, seeing what analysis and research you do there. Curious, very curious to know.
Yeah, it's a difficult thing to wrap your mind around because there's so many different facets to it. But I do think it's worth thinking about. You know, we today price everything in dollars, particularly people in the US. Other people in other countries price in their local currency. But maybe we should be thinking in different terms.
Future's interesting. Let's see.
Final chart. Here's Tesla at 17 trillion. Again, not suggesting the other Mag 6 stand still. I was just adjusting the chart for using the Nvidia multiple.
Yeah, that is crazy. That is insane. Yeah, see, this is why, you know, I like this analysis a lot. It shows the importance of the metrics that's used to, I mean, I do it too on this channel using the P and stuff like that, but that's only for like short-term stuff. And what I would do is that I would go 5 years, 10 years down the line, and based on the revenues then and the profits then, I would slap on a certain amount of PE for that, knowing that at that time, probably if they're growing at 20%, 30%, I think Tesla will continue to trade at a triple digit PE until the early or mid 2030s. Wow. And that's a maybe. I think it could probably be triple then too, depending on how crazy Optimus is going to be. Yeah. Because that's the next thing that's gonna make it give that PE ratio, keep it elevated. But as we saw in the charts, if you're a long-term investor, then the PE doesn't matter right now. That's it. That's it. And this analysis was absolutely spot on when it was talking about the long-term aspect of it and because we got some numbers now as Tesla investors. I'm so happy that we have set milestones of what we need, because prior to this year, prior to not having this, no one knew where the direction of Tesla was going. Right. Like we knew that it was FSD and Robotaxi and Optimus, but we didn't know what are the milestones, what are the goals, how are you gonna get this, stepping steps. But now that we see it, I think investors are more calm. Elon knows what he's doing because he has an incentive plan, and it's a lot more clear. It's very clear actually on what we're looking for. If anyone who wants to become a Tesla investor and they want to know what is the goal of Tesla, we have a nice blueprint on what we're gonna do.
And there's no other company that has that for the next 10 years.
Exactly. And we have a leader who won't get a penny unless he does all this. Well, of course, trenches, but then, bringing, this is insane. Like, why would you not want to be part of this journey when you see what the milestones are, what the goals are? And as a long-term investor, you can see what is the path right now and, what is the clear milestones and goals. And this should really put you at ease. One important thing is that Elon buying $1 billion worth of Tesla at 400. I think that's the reason why it's not going below that. And if it does bounce back up quickly, but it's a strong signal. I think the strongest signal was that Elon buying $1 billion worth of Tesla. I think that was that's insane.
How many other CEOs in history have bought $1 billion of their stock on the open market?
Not.
I think we can name them on one finger.
Yeah, exactly.
Right. Right. The other thing too, I just wanted to mention about PE ratios. So, under what circumstances do you give a company a high PE? Well, certainly high growth, right? Mm-hmm. If you're growing 100% per year, why would you give a company a PE of only 20 or 30? That doesn't make sense. That's obvious. Right. Mm-hmm. Other things that factor into that are high margin businesses, recurring revenue businesses, right? Businesses that have, an incredible moat around the business, right? So this is describing what's going to happen with Robotaxi and Optimus.
Yep.
Robotaxi and Optimus have a moat around them because who else is building the AI infrastructure that Tesla is? It's not like FSD is going to magically come out of nowhere for other companies. Now, I do expect competition in the long run, particularly from China, and certainly on the humanoid bot side. I think there's like 150 companies in China that are trying to produce a humanoid, and they're all pretty good at martial arts, which I'm not sure how that works in the workplace, but maybe in China it's a more brutal workplace. I'm not sure. But anyway, that's the reason why you would grant a high PE, and as you mentioned, that Tesla's growth rate could be quite high for a long time to come.
Yep, 100%. I mean, right now, as we see, operating income is the lowest it's ever been since it's been profitable, and yet we have a very high PE growth rate. The market, I realize about this, Wall Street analysts, I think they watch us, Cern. They watch you, they watch Herbert, they watch Joe, they watch our analysis, and they're giving it a higher multiple, and they're not looking at the quarterly revenue and profits anymore. Like I noticed that every time when they report, when Tesla reports their earnings, whether it's a beat or a miss, it's just post aftermarket is only down or up 1%. Whether it's a big miss or a big beat, it's just the market doesn't care. It's just what Elon is about to say is what they care, and what the guidance is going to say is that's what they care about. And I mean, I think that's a very strong reason why also the stock, why it's in the 400s with a very high PE growth.
Yeah,
it's crazy. It's crazy.
Let me do a quick thought experiment for you. Okay.
All right.
Let's say you and I could time travel.
Okay.
Okay. And let's say I can time travel 1 year ahead and you can time travel 2 years ahead.
Okay.
Okay. Let's say I time travel 1 year ahead and I see that Tesla has, I'm just going to pick a number, 500,000 robotaxis
Okay.
in service. Okay. And if I know that today, now for sure, I come back, what am I going to pay for Tesla?
Oh yeah, you would pay multiple of PE growth, PE ratios. Yeah.
Now,
no doubt about that.
Let's say you time travel 2 years ahead and you see that there's 3 million robotaxis. What are you going to pay for Tesla today?
Everything. I would sell everything and buy.
Right. The stock price would be a lot higher if people knew precisely. So it's the uncertainty about the numbers that causes people to be cautious today. Right. And so this is why, those of us that have FSD and look at the progress, we have a lot more certainty because we have a personal experience with the software. We know how it's performing and how well it's improved. And other investors who haven't experienced FSD or may not even have ridden in a Tesla are trying to pass judgment on this company and figure out, oh, it's overvalued. So this is where it gets interesting is at some point it becomes so clear it's just a matter of the ramp. And I don't know what the ramp is. I don't have foresight to know that they're going to have 500,000 vehicles in the fleet next year. But I'm pretty certain that over the next 10 years, they're going to have millions of vehicles in their fleet. I just don't quite know the pathway to get there.
That's right.
Most of us are so hung up on the short term that we're missing that bigger long-term goal.
That's right. No, you mentioned a really good point. Those who know what the FSD is doing, like I've only been back in Toronto at the recording of this video for like 4 days, like 70 to 96 hours. And when I picked up the car from the airport all the way to home until now, I have not been driving. Like it's incredible to me that I'm just like, it's pretty much solved. Like it's done. Like the thing is done. Like it's ready to go wide release. Like I don't even, people usually when they walk by and they see the steering wheel turning, they're like, "Where's his hands?" Well, I'm not using my hands to drive.
It's got a bowl of food in your hands, yeah.
Exactly, and I'll make a separate video where I have the Chipotle eating it. It's crazy. I'll do it. It's. I was shocked that this thing can do the things that it does. Yeah, it's not. I'll be honest. It's not 100%, but it's 99.69%. I'll say that it's there. I don't even drive anymore. It's insane. Like the other day, my friends and I took my friends from his place to a cafe lounge, and he's just like, "You're not gonna drive?" I'm like, "No." He's just, and he was in awe. It was his first time. He was in awe. He was like, "The thing is driving." I'm like, "Yeah, He's like, it just switched lanes. It just parked. It just like, he was just like, this is incredible. I'm like, you see why I'm all in on Tesla now, dude?
Your comment that it's not 100%, I think, is worth unpacking a little bit, because I would say that humans are not 100%.
That's true. That's true as well.
Right. And so what's the relevant metric to compare it to? The challenge is that FSD might make some mistakes that we as humans look and say, oh, that's silly. Why did it do that? But it also sees things that humans don't.
Oh, yeah.
For example, I was driving the other day here in Florida. It's a nice sunny day. And I watched a car pull out and get T-boned by another car.
Oh.
There's no way that the FSD wouldn't have seen that.
Yeah.
Right. This was a human driver not paying attention. Yes, FSD is going to make some silly mistakes. Yes, FSD is not perfect, but is it safer than the majority of drivers? And I think the answer at this point is absolutely. Is it twice as safe as most drivers? Probably.
I think
will
more.
it be 5 times as safe? Will it be 10 times? Yes, eventually it will be.
Yeah, I think just yesterday I was driving, right, and there was a kid. I put it on X too. Like I didn't even see it. There was a kid who was like on the sidewalk, and then he slipped onto the road, just to the fraction of the road. I didn't even see it, but the FSD slowed, like the car just slowed down big time for cautiously. I'm like, why is it slowing down? And then I see the kid like just slipping. I'm like, oh, I didn't even see that.
Yeah,
that's one instance. The other instance is that another car was in front of me on the highway. It creeped up into my lane, and then the car just slowed down. I'm like, why is it slowing down? And then I see this car just like creeping without any signals. I think he was on his phone or something.
Yeah.
And then I'm just like, I had my friends in the car too, and they're just like, that was insane. Like everyone's like, you guys catch that? Like that was crazy.
The guy in the other car was probably eating his Chipotle bowl without FSD. He was watching you and saying, well, if that guy can eat, then I can too, but then not realizing that his car is not driving for him.
Yeah, no, even today, just today I was driving. I was eating pepperoni sticks, like chocolate dip sticks, and it was driving me. I'm just like, and I had it recorded too. I'm just like, I can eat, I can relax. No one can do, nobody else can do this. But that's the point. Like once everyone realizes this and this becomes the norm, we're going to see a big jump in the valuation.
Yes.
That's the conclusion that I come with every time that I say. It's incredible to me that I just sit in the car and that's all I do. I just sit in the car. That's it. Like I'm just it's crazy.
The big jump in valuation thing is interesting because I feel like a lot of people are trying to pick that moment.
Yes.
And it may not be like an announcement. It may not be anything. It may just kind of happen.
Yes.
Because if you knew when it was, or if you knew what the metric you're looking for is, then why wouldn't you front run that just by a little bit? Like for example, let's say the number is they need 5,000 robotaxis in the market, and once they get there, then it's just a matter of scaling it. Well, wouldn't you be okay with 4,500? Then wouldn't you be okay with 4,000? Like why? So what's so magical about 5,000? Well, nothing.
Nothing. Yeah.
Right. And this is kind of where we are today. A lot of us are saying, well, okay, there's very few in the fleet right now. And yes, there's safety monitors, but you know what? We're not too many steps away from beginning that ramp phase.
Yeah.
So it's going to be very interesting to watch how this unfolds in 2026. It's going to be an exciting year, I think, for Tesla.
Yeah. Exciting year for robotaxis, FSD. Very looking forward to it.
Megapack.
Oh my God. Yeah.
Optimus. Yep.
It's gonna be. I'm more interested to see what Q3, Q4 of 2026 is gonna look like.
Yes,
I think those are the quarters that we're gonna see some very, very interesting things, and it's gotta be ready for that.
I remember a time when Nvidia started to print, one quarter after the next higher and higher and higher, and it felt like for 2 years Wall Street was trying to catch up.
Yeah,
and I can easily see a similar thing happening with Tesla.
Yep. It's exciting. I just, it's gonna be great. It's gonna be great. Sheesh. Love it. Thank you, Cern Basher. Always a pleasure.
Thanks for having me.
Always a pleasure. These analysis, insights, they are top notch and very valuable for the community and for me as well. Like this analysis was when we compared the Max 7 to Tesla, I mean, it's a very good perspective to look at and opens your eyes. And I appreciate that. Thank you. Thank you so much. And those of you guys who aren't following Cern Basher, make sure you guys follow him. Links in the description on his X and YouTube. Until the next one, Cern, see you guys in the next video.
Can't wait for the next one. Thanks, Pejjy.
It's going to be awesome. See you.